I know most of you find it very hard to analyze the market. So this is the best system that can assist you when you want to analyze the market. So this simple system can analyze any pair using MetaTrader 5. So what you need to do is you just need to download your MetaTrader 5 for PC. Then you install this simple system. It will assist you when you are analyzing the market, and it has got so many properties. You can see that it has got blue lines and red lines. Blue lines are there to show you that there's going to be a reversal going downwards. The red lines are there to show you that there's going to be a reversal going upwards. Then we also have this line. When it's green, it means that the market is what is going up. But when it turns red, it means the market is now going downwards. Then we also have this window. This window is there to show you that the market is going up or it's going down. When there is a blue arrow pointing upwards, it means the market will be going up. When the arrow is now pointing downwards, it means the market is now going down. But the best way to trade using this simple system is to analyze using top to down analysis. What do I mean by top to down analysis? I'll be talking about analyzing from daily time frame to M1. Right. So first, let's check our daily time frame. What is our daily time frame saying? Right. So I'm going to zoom it a bit. So here you can see that there is no clear candlestick on H1, which is a sign that the market can make a reversal because it hasn't confirmed the sell setup yet. So here we cannot say the market is going to drop because it's not yet confirmed. But if this candlestick crosses this board, then we can now say the market is now dropping. All right. But we can now see that the market is now trying to create a structure that is good for us to place sell entries. So what you need to do is you check your daily time frame. Let's say you have seen a daily time frame like this. What you need to do is you just need to wait for a pullback because these candlesticks are not telling you anything. So you go back to your H1. Let's check H1. H1, what is it saying? You can see that this candlestick was engulfed by this one. So it means there is a higher probability that the market can drop, but it has to make a reversal first. So here we now check on M1 so that we can see the perfect entry. So here we can now see that it has reached the trend line, this one. You can also draw a trend line so that you can see how the spikes are occurring. Here you can see that it has reached the trend line, but according to the system, it's saying the market should pull back to this node return number 5. Right. If it doesn't spike on this node, it means it will go back to this blue line. Okay. So the best way, if you want to enter a trade that will not give you a very huge drawdown, you have to wait for a very good setup whereby the market will create a structure that will show you that the market is now dropping. Because if you enter now, the chances for you to get a very huge drawdown are very high. Plus, as you can see now, it has got two signals. It's saying if it doesn't spike here, it will spike at this node. But this node is now above this blue line. So it means if it crosses this blue line, we will confirm that the market is now going up. So for you to start selling here, it would be very hard. So that's why I always tell people to wait for it to create a structure that will be showing that the market is now dropping. Let me look for that type of a structure that will give you more confidence that the market is now what? Is now dropping. All right. So this is the structure I'm talking about. This one. You can see that the market was dropping like this, right? Then it just made a simple pullback to this red line. Then what happened next? It dropped further. So these are the setups you should look for when you are trading. Right. Then the easiest pairs to trade using this simple system, we have crash 300, crash 600, and crash 500. Those pairs are very easy to trade using this simple system. This simple system will make life easier for you, right? So I'm going to check another pair. Let's see, boom 1000. So why do I say it's now risky for you to buy boom 1000 now? It's because it has crossed this red line. When it has crossed this red line, it becomes very hard for you to enter a buy signal because it might start to drop. But you'll be also late to enter a sell signal. But if you want to enter a sell signal, you have to enter just after crossing this red line. Then you can hold until it reaches this red line. The only risk when you're trading ticks is you just need a very you need a big equity first, so that when it spikes you'll be able to hold that trade, because it can spike then sell later. So we are going to check another pair. This is crash 900. What is crash 900 saying on our H1? It's saying buy according to the latest signal. So when it's like this, you have to wait for it to confirm the sell. So you should get a sell entry on H1 to know that the market is now what? Is now dropping. So we check on again on boom 600. This is boom 600, right? And usually when it reaches an area like this, you have to know that there is resistance. And now it has got only one unshaded node. So there is a possibility that boom 600 will give a spike. So just to check, boom 600 will give a spike, but you don't have to hold that trade because it won't be confirmed yet. So what you have to do is, after giving a spike, you take profit. Then you wait for it to pull back to the zone where it spiked. Then you enter again. That is how you trade this kind of a setup. But this kind of a setup, if it breaks this zone, you just have to close that trade. But I prefer trading setups whereby you are 100% sure that the market is now going, because it's very risky for you to enter a trade whereby you are trying to make the market turn. So we check again on which pair can we trade. You can also trade volatilities using this simple system. And volatilities are easy because you can see that it reached this blue line, then reversed, reached the blue line, reversed, reached the blue line, reversed. So now you can see that it has reached the blue line again. So it would be easy for you to enter a sell, then you close it when it's about to reach this zone. So normally volatilities are always ranging. That is how they move. That's why you see that if you add your positions too early, you might end up blowing your account because it can reverse fast. So avoid adding positions when you're trading volatilities. So in a nutshell, this is how the simple system works. And if you want to see more of our videos, you just have to subscribe to our channel. I'm going to be posting more videos.